Part of my experience as a trader, one of the challenges that we have often, including myself, until I discovered this strategy, is the challenge of how to determine my entry confirmation. It is easier to analyze, but at times coming to determine how to confirm your entry becomes a challenge. You make an entry, you realize that price take you out, and at times price will still take you out and still continue in the same direction of your analysis. And that is why this video is very much important, as this video tends to drive you through the process of solving your entry confirmation. So in this video, I'll be showing you how exactly you can confirm your entry using the combination of the Bollinger Band in order to validate your entry. This is the setting of the Bollinger Band. The period is 130, deviation is 2.0, shift is 0, you apply to close, and it is a 2-pixel indicator. And if you have not set up your relative strength index, here is exactly the relative strength index. And this, you change it to white if your background is white, and if yours is black, please you kindly change the color to black. And here is our level 90, 10, 50, 20, and 80 respectively. Afterwards, we have our commodity channel index, typical price, high, low, close 3. And once your indicator is set up correctly, this is how your chart will be looking like. Now, the advantage of this Bollinger Band, as you can see, is that it helps us to as well determine our entry. So this is the middle Bollinger Band. If you are a trader who is struggling with how to determine your trend of the market, you can use the 4-hour time frame of this chart in order for you to solve that problem. So what that simply means is that whenever price is above the middle Bollinger Band, you are in an uptrend, and when price is below the middle Bollinger Band, it simply shows that you are in a downtrend. So the middle Bollinger Band helps us to determine trend and also serve for our entry confirmation, while the upper Bollinger Band and the lower Bollinger Band are strictly for determining and confirmation of entry when it comes to trading. So what that implies is, at the upper Bollinger Band, remember, we always sell high and we buy low. So at the upper Bollinger Band, we are looking for selling opportunity, while at the lower Bollinger Band, we are looking for a buying opportunity. Now, this selling and buying opportunity is not just in isolation. That doesn't mean because price is at the upper Bollinger Band, you will sell, no, or because price is at the lower Bollinger Band, you just jump into buying, no. That's not what we are talking about. What we are saying in essence is that when price is around this zone and it coincides with your point of value, your point of interest, I will always say, can be your order block, can be your support or a resistance, it can be a smart money cube, it can be a fair value gap. So once you have that, this Bollinger Band will help you to validate and to confirm your entry. So it means that when each of these ones falls within the range of your Bollinger Band, you have a higher probability trade in those zones. So let's look at this. You can see now that price, this is step index, and price has been bullish. Okay, so let me say this quickly. For you to confirm your trend direction when it comes in terms of trend, you need to pay attention that the fact that price just crossed above the middle Bollinger Band, it is not enough for you to conclude that you are in an uptrend. So you will need a validation, which means that if price crosses it this way, so you need the price to retest it this way, and then let it validate by giving us an engulfing candlestick pattern, and afterward we have this engulfing candlestick pattern. So this is the simple way. This is how you can now have your structural point of which you can actually connect your trend line this way. And if you are a structural market trader, you can now have your higher low, your higher high, and then your higher low, and then your higher high, as the case may be. Now, having established that, let us look at how we can find our entry on this particular area. Now, looking at this, price left this zone, and when price left this zone, price went up. So automatically we are having a support here which will double as our order block. Another important factor, remember I just explained now that when price just break out of this zone, it is not enough to confirm it as a change of trend. Unlike in this scenario, you see that price came down at this zone but eventually went back up. So if this is going to be a change, price will be able to break down, retest it, and continue to the downside. So that's just it. So here price pull back into this particular order block. Now this is a 4-hour time frame. I will not advise you make entry on a 4-hour time frame. Okay, now this price breaking through the order block is a liquidity sweep, because there are many people who, when price break through here, took a trade. Many people buy when price came into this zone, but what the smart money does is that they came into this zone knowing that people will buy. Because of how price play out, you can see rejection in that zone. They throw a wick to take away liquidity, take away those people that buy. And after taking them out, they now begin to move in the original direction of the market. So this is a typical manipulation. So however, when price come into this other block, if you are to make your entry on a 1-hour time frame, you'll be using a candlestick pattern formation. Now this is that zone. This is price returning back into that zone. You can see this. Now price is back into this zone. My question now is, how do we now buy from this zone? Now it is a simple scenario. Remember I told you earlier, I said the advantage of the lower Bollinger Band is for entry confirmation, while that of the upper Bollinger Band is also for a sell entry confirmation. So from our analysis, you now realize that our point of interest on a 4-hour, when price come into that point of interest, it coincides with the lower Bollinger Band on the time frame where we want to make entry. Which means that now we have double confirmation. One point is in our support zone or another block. Number 2, point is around the lower Bollinger Band, and this lower Bollinger Band serves as a dynamic support and resistance. So price is in the lower Bollinger Band. Number 3, we are having a divergence. So you can see now that we have multiple confluence to validate this. So here we are having this particular divergence. So now that we have all of this, this is a 1-hour time frame. So what do we need to make our entry? On the 1-hour time frame, we always said entry are based on candlestick confirmation. So the candlestick confirmation we are having here is a bullish engulfing candle. I just want to zoom a little so we can see it. And here is the bullish engulfing candle. So you can see that, and that gives us a beautiful trade entry. So this is how it works. If we narrow this down to 15 minutes, you can see the same thing on a 15 minutes. We have divergence. You see the same divergence playing out on the 15 minutes, and price move from here to the upside. And you can see that when this was happening is at the lower Bollinger Band. You can see the Bollinger Band. So this helps you to confirm and validate every of your trade entry that you want to take. So now you realize price has left here, right, and went to the upside. So here becomes our next order block. So now the price is out of this zone, we have this being marked out as our next order block. But however, price did not come back to retest this order block. So you can see that what now happened, price come to retest the middle Bollinger Band again without reaching down to the order block. So one of the way we can do this is for us to put our Fibonacci retracement tool in order for us to examine where the trend pull back to. If it is up to our 50 zone, and now you can see that this trend pull back all the way to 61.8 zone of our Fibonacci, which is a good zone and also coincide with our middle Bollinger Band. So we will now move to 1 hour time frame to see what we are having. You see that zone there? Now look at this. On a 1 hour time frame, this is happening in the zone of an order block. Let me show you something. Price is giving us here, now we have a higher low, a higher high, a higher low, a higher high, and then here we are having a higher low and then a higher high. So you will realize that first, this particular, when price gave us this higher high, price came here and returned back to the upside to give us a new higher high. But now when price come to retest this particular first order block, it went up, right, thereby giving us a new order block. So now here is the new order block. So this new order block, price has not mitigated. So what do we do? Let's mark out that new order block, which is this. So you can see now that on our H4, that new order block on the H1 is where price came to make this particular retest. You can see that. So price pull back to retest this H1 order block. And when that was happening, you can see how this actually plays out. What do you see? A bullish engulfing candle, commodity channel index crosses above the 50 level, right, and then price around the zone of the middle Bollinger Band. So this is a double entry confirmation. If we move down to 15 minutes, it will be at the lower Bollinger Band. Can you see that? So this strategy is so much precise and accurate when it comes to making entry. Can you see that beautiful entry there? Look at this. Here we are having a little more divergence. This is the best sniper entry you can get. And this. And now it's happening around the zone of our lower Bollinger Band. And I believe you have learned something new. Please do not forget to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. And please do well to like. The only way YouTube algorithm can recommend this video is by you commenting, liking. Please like, please comment. Thank you, and see you in the subsequent video.